Howdy, welcome back to another installment of our video series on the economic and legal considerations for hemp production in Texas. I'm Stephen Klose, and this is part one of our crop insurance section, where we will be reviewing the options that you have available to you to manage yield and or possibly revenue risk. So to start with, all of the programs that we're going to look at are USDA programs, and it's important to kind of remember background there that the USDA is governed and directed by both legislation and regulations, and of course their interpretation of both of those. And you have two different pathways really, or agencies where insurance products are delivered. The first of which is the most traditional risk management agency working through a system of contracted private companies, private approved insurance providers, and local crop insurance agents. You would be buying these products through a local crop insurance agent, even though they are products of USDA and RMA. Those specifically are three of the four we're going to look at, and that's multi-peril crop insurance, whole farm revenue protection, and nursery crop insurance. So the other option then, fourth one that we're going to look at, is a different agency of USDA, and that's through the Farm Service Agency, another agency that our traditional ag producers are very familiar with. But instead of working through a local crop insurance agent, you would work with your local county FSA office, and so there's a local office in just about every county, and through that office you might be able to use a program simply referred to as NAP, which is Non-Insured Crop Disaster Assistance Program. So before we get into any of the specifics about each program, it's important to kind of take a step back. I know Tiffany talked to you about all the legal requirements, but in order to qualify for any of the USDA programs, you have to satisfy a certain number of requirements, and in general these are you have to be doing things in a legal manner. So you have to have an official certifications or license to produce, you have to be working with under a contract with a processor, and then you have to be doing things in accordance with the requirements, management practices, and expectations of that processor. And of course you have to plant and produce an appropriate variety. Also important to note for all of the programs that THC testing above 0.3% is not an insurable loss for any of the programs that we will look at. And the other thing that is important to remember is premiums are typically offered at subsidized rates for most of these programs. So instead of paying the full value of what would be an actuarial premium, you might find some good value in some of these programs. So to start off with, Multi-Peril Crop Insurance is a hemp pilot program. In addition to the standard requirements to be eligible for multi-peril crop insurance, you have to have produced at least a minimum of 1 year of history producing hemp crop. In addition to that, to be eligible for the insurance, you have to produce 5 acres of hemp if you are producing for CBD, or if you're growing hemp for grain or fiber, the minimum is 20 acres. It is limited in terms of availability, in terms of it's not available in every state, and even in states where it is available, there are sometimes counties where it's not available. It's a simple yield policy, so you insure a percentage of an approved historical yield, and premium subsidies range from 55% to 67%, depending on the level of coverage you buy. Yield losses then, if it's determined that you have a loss below your guaranteed level, yield losses are paid at predetermined USDA announced prices. Whole farm revenue protection is much like the name suggests. You combine all of your commodity production into one basket, so to speak, and you guarantee the total revenue across all of that production. Hemp is eligible, and it is available nationwide. It's generally suited best for diversified farms or folks that are growing specialty crops. However, if you are only growing hemp, you may still be eligible. You can choose whole farm revenue if you only have one commodity production. Some of the advantages of higher subsidy rates aren't there if you only have one crop. But you still might be eligible, particularly if you're in some of those counties where multi-peril is not available. So the way that program works is based on your farm history, you establish an insurable revenue, and then you choose a percentage of that revenue, and then if your revenue falls short of that, you would receive an indemnity. There are programs for nursery growers, nursery crop insurance. It's a little bit different from our other products in that it is an asset-based form of insurance. So instead of insuring a production level or a revenue level, you're insuring a value of an asset or a value of your inventory, much like you would insure the value of your home or your car. And so the coverage levels, like some of the other products, range from 50 to 75% coverage, but again, you're covering that percentage of an inventory value. And similar to the others, premium subsidies range anywhere from 55% to 67%. Some unique requirements to nursery crop insurance is that the plants must be container grown and intended to be sold with the root system intact and still attached. So nothing where you're harvesting something off the plant. You're selling the plant as a plant. You must qualify as a wholesale nursery, so there's specific income requirements to make that qualification, and there are other fairly strict compliance requirements to fit under this program. And then finally, the NAP program, or Non-Insurable Crop Disaster Assistance. This is the least restrictive of the 4 programs that we will look at. It is available nationwide. It's a little bit unique in that, as we said before, it is delivered through the Farm Service Agency and not a local crop insurance agent. It is in fact designed for commodities for which there is not crop insurance available. So in fact, that's one of the eligibility issues. If you're growing a crop that there is a crop insurance product available for that production, then you wouldn't be eligible to even purchase NAP in that case. And much like the other products, a proven history of production is important to establish your level of production and the revenue that you can guarantee. So kind of a broad set of other considerations to think about that apply for all of these programs. I think you will find that coverage levels will be low relative to your yield expectations, and maybe likely relative to your price expectations. And that's due to a lack of history and a lack of experience both on the part of the producers and those that are providing the insurance. This is kind of new to everybody, so there's a sense of being conservative about this. I think the way to look at that, though, and this is not different from our traditional commodity production insurance that we would tell folks, you don't plan to use insurance as a way to lock in a profit. So you need to know your cost of production, know what you have in it, and know what you would hope to get back in case of a complete disaster type of thing. So you're really looking at mitigating losses in a disaster situation, and don't think of it as an opportunity to lock in a profit, because that's probably not going to be there. And then specifically on all of these, understand what types of losses are covered, and maybe more specifically what losses are not covered. Again, we mentioned THC testing too high is not covered, and there's lots of fine print on some more than others, but lots of fine print you need to know about. So you need to have that long conversation with either FSA or your crop insurance agent. With all of these, there are specific deadlines. You need to start the conversation sooner rather than later. There are sales closing dates, dates before which you have to plant, and acreage reporting and things like that. So you need to know what those are and what those deadlines are. In all of these cases, if you have been farming for less than 5 years, you might qualify as a beginning farmer, and if you for sure want to ask about those provisions, there are opportunities to improve your approved yields, to bump those up to have higher levels of coverage. You might have reduced fees or lower premiums. And this next one, in case of a loss, doesn't exactly work the same way with all of them, but the concept is the same in that as soon as you know you might have a loss, you have a limited window that you are required to file notice of that loss. And for sure you don't want to do anything with that crop. You don't want to destroy it or replant it or anything of that nature until you talk to an agent and discuss exactly what your options are. There are specific things that you can do that might nullify your contract. In every case, you want to document as much as you can. So you need verifiable documentation that you have indeed planted a crop, particularly in a situation where maybe the crop didn't even come up. But you need sales receipts, seed tickets. If you have any custom work done, it'd be great to have a record of that, and any of your farm records, dates when you did certain activities. If you keep a record of those are all help paint the picture and provide the proof of the crop that you have out there. Finally, a few resources that might be useful to you. If you will look at the USDA Risk Management Agency website, I have the website there on the slide, but you can just search for USDA RMA, and probably the first thing that will pop up will be the landing site for their website. On the main menu bar, there's a tools option, and under that you can find really helpful tools to help you find a crop insurance agent, to help you estimate premium costs, price discovery, so at what prices will losses be paid. And then actuarial information browser is a little more complicated, but lots of good information in there about which counties have eligible policies and the different products that are available, substitute transition yields, and those sales closing dates and planting dates and things like that. Also specific to hemp, if you look under the topics item on the menu bar there is lots of good information and press releases and frequently asked questions related to hemp. Related to the NAP coverage, then that's the website there, the last one for the Farm Service Agency. And again, you can likely look for USDA, FSA, and NAP, and that will take you right to that page. Good information there as well. That's all I have for an overview. Appreciate the opportunity to be with you for a minute, and if you have any questions, I'd be glad to hear from you. Send me an email, and if I can answer it, I'd be glad to help. If I can't, I will find you somebody that can help. If you would take a minute to scan the QR code that will come up next and take the survey to let us know, give us some feedback on the videos. This is really helpful, in particular for our sponsor, the Southern Extension Risk Management Education Center, to give them some good feedback in terms of the education that we're doing. And we appreciate that feedback as well so that we can better our programs.